everybody. Good morning, good evening, good afternoon, depending on the place of the world that you are getting connected. So welcome to this panel. One second. Give me just 1 second. Sorry, I'm just putting all my documents organized. All right, welcome to this panel, an inclusive assessment of climate-related financial risk in the agriculture sector. My name is Alejandro Solis. I'm here in Costa Rica, so it's 5:30 a.m. I will just ask the attendees and everyone to put your microphone in mute while they are not speaking. So please do so. This panel basically will be interactive. We'll have a short video and presentation at the beginning that will explain the approach that we followed, and it will have after that an open space and to conversation with the panelists, bringing different perspectives from the global perspective and global vision, and also going down to the farmer level, the financial sector level, and also the climatic data and technology level. So finally, we'll have time to ask questions to our panelists and then have an open conversation with all the invitees or all the attendees in this panel. At the end, we'll close with a brief summary of the session, and then that will be the end of the panel. With me, I have a great panel today. Lindbergh Smith, he's the program coordinator of the Belize Credit Union League, part of a key piece of this project and this approach that we followed and will be explained today. Melissa Almendares, she's the senior project officer at the Ministry of Agriculture in Belize, and also she has worked a lot and she has lots of experience working at the community level with the farmers. So she will bring also this perspective in the panel. So welcome, Melissa. Thank you for being here. Norman Avila, he's Guatemalan, also general manager of Meteotech, meteorological and climate startup based, yes, in Guatemala. And also Norman helped us on creating this CTAR, this tool that we'll be presenting today. So Norman has a large experience working with the climate and meteorological data. And then he will provide also this perspective from what about the data? What about the technology and how this is important to bring in the mix? And finally, but no less important, Vairav Raj, he's the director of the responsible business at the Sustainable Business Group at DAI. Also, Vairav was the lead on this project where we work and we generate this climate tool for assess risk and preparedness. So thank you, everyone. Thank you, the panelists. It's a pleasure for me to be the moderator today. So we'll get this started, and then after I finish this introduction, we'll start with a video. So as you might know, already prone to extreme events, Latin America and the Caribbean are likely to experience increase of number of these events soon. For example, in 2020, Atlantic Ocean hurricane season was the most active on record. Also, other phenomena such as rising water and extreme but no less intense precipitation are likely to have severe chronic impacts in the region. Climate risk appraisal can be costly and technological burdensome. So the due diligence needed for loans, insurance, and reinsurance premiums on capital-intensive green infrastructure requires a high degree of climate literacy. The sheer sums of money involved in this endeavor help justify the complexity of the algorithms that compute the risk scoring among some risk assessors. Under the IDB EcoMicro project, DI developed the Climate TARP, the tool to assess risk and preparedness, a digital tool that provides a balanced approach to climate-related risk and preparedness analysis. CTARP assesses the portfolio vulnerability in 3 different perspectives: business information, and its relationship with the investment portfolio, business location, analyze it from the climatological perspective, looking specifically the probability that an adverse climate event will occur and impact the sector. And the third pillar is the level of preparation demonstrated by the client, and the client side assimilate the climate adaptation technologies and technique. Looking at TARP from a climate finance and agriculture perspective, panelists today will examine how the tools use of climate data made access to finance in the agricultural sector more inclusive in Central America. Now, we'll present a short video about CTARP approach and why this is so important for the financial markets.
The surface temperature of the Earth has risen at a record pace in recent decades, creating risks to human life, ecosystems, and economies. Climate science tells us that further warming is unavoidable over the next decade, and probably after that as well. In this uncertain environment, financial institutions must act on two fronts. They need to both manage their own climate-related financial exposure and to help finance a green agenda, which will be critical to mitigate the impact of global warming. Climate risk management is imperative in both cases. Climate risk appraisal can be a costly and technologically burdensome challenge. The due diligence needed for loans, insurance, or reinsurance premiums on capital-intensive green infrastructure requires a high degree of climate literacy. Some risk assessors and lenders can justify spending large sums to develop their own complex algorithms that compute climate risk scores. But smaller financial institutions serving small and medium enterprises, SMEs, require another solution. DAI has designed a digital climate tool for assessing risk and preparedness, Climate TARP, for this purpose. Three main pillars inform Climate TARP's analysis: information about the individual business and its relationship with the investment portfolio, geolocation of the business analyzed from a climatological perspective, referring to the probability that a climate-related event relevant to the sector will occur, and the business's integration of climate adaptation technologies and techniques at their place of business. By providing granular detail about climate-related financial risks for individual clients, applying the Climate TARP approach can help improve access to finance for SMEs that produce the food we eat, the products we consume, and provide the tourism experiences that we are all craving in these pandemic-affected times.
All right. Thank you, AJ, for displaying or showing the video. This approach, the Climate TARP, and then we are bringing this tool as a center of discussion, but we are going to talk about generally about the climate effect and then how the data and all related around the climate finance will impact, and then how we find this opportunity. This tool was implemented recently in Belize. And then today with us, Lindbergh Smith, he's part of the Belize Credit Union League, will present us their experience of using Climate TARP in all the organizations that they work with, and then what outcomes they got. So Lindbergh, the floor is yours.
All right, good morning, everyone. I'll just will they be showing the mini presentation? No, or just?
I can show, I can present, I can run the presentation for you, Lindbergh.
Yes, please. That would help me and guide.
No problem. Give me 1 second. Can you see it?
Yep, seeing it perfect.
Okay, go ahead.
All right, good morning, everyone. Afternoon, evening. I know it's quite an early one for us here in Belize, but yes, I'm presenting the Belize Credit Union League, who is the executing agency for this current eco-micro project within the Caribbean Basin. So I will be giving a quick overview of the league and a little bit of our experience on using the TARP. Next. Okay, the league is the apex organization which looks after the development and betterment of credit union in Belize. Total, we have 9 credit unions. Of the 9 credit unions, we have 2 that are closed, which is the Spanish Lookout and Blue Creek credit unions. And of the 7 credit unions, we have 3 credit unions participating in the Eco-Micro program, which is spread across the northern and southern part of the country. So we have quite a, we have a good representation of credit unions using the Eco-Micro or participating in the Eco-Micro project. Next slide. To date, we have at least 23 loans piloted. We have a little bit more than that, but our last check reveals 23 loans. They're in several categories, which is livestock and agriculture. They are spread across the region.
We lost Lindbergh, seems like.
2 things, which is energy efficiency and looking at how to improve your agricultural yields. Next. For the farmers here in Belize, there are 3 main climate shocks that or vulnerabilities that we experience year in, year out, or year after year. And those 3 main vulnerabilities includes drought, sometimes extreme flooding, extreme climatic rain or rainfalls, and then the other one is wildfires. But of the 2, it's more drought and flooding that we experience, and these are all pictures you're seeing on the screen from Belize, which of droughts we have experienced in recent times. These are something farmers have to battle with every time and find ways to kind of avoid being hit hard with these climatic shocks. Now the farmers in recent times, because of these climatic shocks, sometimes suffer total crop losses. Sometimes because of having prior loans or previous loans, they are limited to financial access. And sometimes they're already being, because of getting new loans, they're over indebted. So they're being stretched really thin. And we realize that one of the opportunities arising from green financing is the need for alternative financing. So farmers need to start to invest in smarter and more greener ways. The need to utilize technologies within their operations is also a must today, because you realize that the traditional way of doing farming, especially for farmers here in Belize, and I'm assuming globally, you're not getting the yield that you used to. There's also a need now for even technical support. In Belize, we have our farmers who are more traditional farmers. They have been doing this with their dad from they're very young. And so the need for capacity building and technical support was something needed. And also to also improve the value chain too as well, because sometimes these farmers just plant, grow their crops, and realize that at the end of the day, where do I sell? So the need for a value chain and the need for technical support from agencies, government agencies and non-government agencies, to help boost these farmers and to help ensure that there's not a huge crop loss is very important. And so these are some of the opportunities we realize in participating in this Eco-Micro that credit unions will need to look into and need to start to provide. So we are looking at the entire package rather than just individual loans. Now, this is a video just sharing a little bit of the credit union experience, one of our credit union using the climate tab, and I will do some other reinforcement shortly after that.
have to have in consideration of drought. For example, if it's for animal raising, he has to consider the well so that he can give water to the animals, or if it's in agriculture for the plantation, he has to consider irrigation. It's very important that he would have an irrigation system for his area.
Okay, Ali, you can go and I will come back to this video a little bit. I will call back on him, but you can go to the next slide.
Sure.
All right. That's just a short video showing one of our credit unions utilizing the tool. But some of the important thing with, or some of the most important points to consider using this tool or using climate tools is that it improves the decision making for credit officers. So this tool was something real hands-on. Credit unions never had it before. And using geolocation and heat maps, we realized that credit unions can map and get a immediate visual of where the farmer is located, the location, the risk associated with that particular location. And it helps credit union, it helps credit officers to guide members with respect to investment. For example, you realize that the video shows where the farmer was, the area the farmer was a high drought, was high risk for drought. And so a suggestion from that loan or that credit officer was irrigation system. So the tool is very handy. It's not a decision-making tool, but it helps improve the decision-making with the decision-making that credit officers may face with. It also strengthens both parties' position too, because you realize that as a financial institution, you have to give out secure loans. And so what this does is try to mitigate the risk. You will never have a risk-free loan, but you can mitigate the risk with these type of loans. And so that is one of the things that the tool tries to assist or help with. It also allows the credit officer to make better recommendations to the farmers too. The idea here is to develop a stronger relationship between the credit officer and the loan recipient, because the idea here is to also ensure that when you give out a loan, you want to be monitoring that the investment goes right. You want to ensure that the farmer is investing in what he or she intends to invest in. So the idea here is to develop a stronger relationship and a bond to ensure that you can assist the farmer in the future to do other and bigger investments too. It also improves the FI's competitive advantage, because using climate risk tool is something is new for credit unions. I think it's also new for our commercial banks here in Belize, and I don't think our commercial banks are using any of these kind of tools. But what it does, it puts you at an advantage, because you have now information at your fingertips that you can use to improve your current position and what you're doing. Futuristic modification. While this tool is very important and while this tool is very good as is, there are some futuristic modification that can be used or if incorporated in other places. These are some of the things that you may want to consider adding or to have a better experience using the tool. And one of the things is to incorporate the tool into your core banking platform so it can be used across the loan portfolio. That's one of the things as is. It's not for us, it's not a part of our core banking, but once that is incorporated, it can do a whole lot more for you. Two, add other components or fields tables to show progress a farmer has made in a particular location, especially when it comes to applying for future loans, because as is, if a loan recipient goes back in for another loan or to invest in other green technologies, the tool at this point does not really track the investment on that particular area. And so if you're to incorporate tables to track those kind of investment, then the table will, the tool will be able to give you a different risk rating because it is showing that you're investing and doing much more. And one of the other things is perhaps a green financing app, which also improves the loan application process when applying for these kind of green loans, or providing tips to farmers and also providing weather updates on maybe promotional on promotions regarding to green financing, linking this up to the weather so farmers could have the weather at their fingertips too. So these are some of the things that maybe could be incorporated as this tool is being, maybe is being adopted by other FIs, you know? So these are some of the things, and also these are some of the considerations for us here in Belize too, as we look at the tool or strengthen the use of the tool and the utility of the tool as well. So those points to consider and some of the good things. Again, remember, it's not a decision-making tool, it's a tool to help you improve your decision-making from a FI institution.
Thank you, Lindbergh. That was a great presentation, and actually that will open us to a good discussion. We'll have some questions for you, Lindbergh, in the next few minutes that we are going to have. So thank you for that. And yes, actually the technology will help us to support our decision. And then it's not a goal itself, it is a helper on that direction. Yeah. So that connect me into a broader question. We just saw the specific case at the credit union level in how this finance institution is using the tool and using the climate information to help and then provide alternatives options to the farmers. But let's take 2 steps back and then let's see a wider vision. And then for that, I will just ask Vairav to tell us why this is so important and why the climate finance, and specifically the climate assessment, the risk assessment, is taking more importance these days in the finance sector currently worldwide. Vairav?
Fantastic. Thank you so much, Alejandro and fellow panelists, and greetings to all the listeners on this webinar. So, you know, let me take a step back and give a sense of what's in front of us in terms of, you know, what we should be concerned about. But at the same time, I want to give you a sense of what the opportunity is here. I think it's important to balance the threat to us and also what is the opportunity. So, you know, we just heard from Lindbergh about the example in Belize and how credit unions are supporting their members and the businesses that get their support in terms of access to finance. If we now roll out and we look at a global perspective, you know, there's so many parts of our world that are exposed to key sectors of the economy, for example, agribusiness, for example, tourism, where so many people are employed by agribusiness, so many people are employed by other sectors like tourism, and yet they are on the front lines of climate change. So they are in many parts of the world are in climatically inflicted zones, whether that is, you know, threat of more extreme wet conditions, whether that's the threat of more extreme dry conditions, whether that's the threat of more extreme wind conditions or fire conditions. All of those have a direct implication on the ability of economies to grow and provide to their citizens what they need in terms of being able to prosper. So therefore, you know, if we're now rolling up at a higher level, we need to have systems in place that allow more resiliency to take place. Now, if we move away from the Caribbean for a sec and go to a part of the world that I'm, you know, also very familiar with, and from which I'm from, the African continent, you know, it's interesting to remark that the 70% of Africans, quote unquote, are employed in agricultural sector, right? In other words, either employed or they seek livelihood from that. Yet, according to the African Development Bank, only 3% of all financial services and investment goes towards agribusiness. Yet, in terms of when we talk about what are the sort of losses that happen as a result of climate change, it's quite substantial, and it can range, right? It can be that for some countries, it could be as little as 3% in terms of losses, but others, it can be as high as 40%. And I don't like to spotlight examples in case any listeners are from that particular country, but some of those, let me give an example. Madagascar is an island economy, very rich in large population, very rich in export commodities. Think of all the amazing ingredients that you have in all the things that you enjoy, whether that's cloves, whether that's cinnamon, whether that's vanilla, all of these things that we enjoy in our consumer goods. Yet when climatic events eradicate 90% of their crops, that has an extremely significant effect on those people that live off those economies. And most of their ability to grow their gross domestic product and their export value comes from agricultural commodities. So now, what is the opportunity here, right? There's an awful lot we can do in order to make businesses that are producing the items that we enjoy, like the cinnamon, like the tea, like the coffee, like the bananas, like the pineapples, and also, in fact, that's on the one hand side of the consumer goods. On the other hand, there's the food staples that are important for societies to be resilient, whether that's maize, whether that is sorghum, whether that is cassava, right? To do all of that, we need to, I go back to that data point of only 3% of finance is going towards agribusiness. That is a problem, but there's also an opportunity, right? The opportunity is, how do you, if I look at that 3%, to me, that tells me that there's a lot of risk aversion from the financial sector, whether that's mainstream investment banks, right down to microfinanciers, to credit unions, to smaller commercial banks. That means that there's a big risk aversion. So now, to close that risk aversion, they need access to data. They need access to being able to information that allows them to make more bolder decisions that are data-driven and evidence-based. And that's why it's important that any financial institution will have some level of doing due diligence on their customers ahead of underwriting a loan, or insurance companies ahead of underwriting insurance premiums. And what we're seeing now as an opportunity that we need to mainstream and scale up globally is, how do you, when they do credit risk analysis, for which they're looking at lots of different aspects of credit risk among the portfolio, they now need to drive climate risk as an aspect of that overall credit risk. So it's not just a nice add-on, but it's something that is mainstream. That will actually boost that 3% to 5% to 10% to 20% over time, so that we can actually get financial services deployed downstream to the last mile or kilometer where they're actually needed. So Ali, I'm conscious that I'm speaking for a long, and I can be very passionate about the subject. In case you want me to go on, I can, but it is to say that, so on one hand, you need to mainstream into how financial institutions appraise credit risk. On the other hand, what we're seeing as a trend is that at the macro level, on the policy and the regulation, we're seeing now prudential regulation, meaning the regulation upon financial institutions to act responsibly is now changing, and we're seeing just recently the Basel pronounced BAL, but spelled BASL, Basel prudential regulations are being updated now to accommodate climate risk as part of it. Now that has a cascade effect. So cascade like a waterfall, meaning more and more financial institutions from tier 1 all the way down will start adopting that type of prudential regulation. That should help. And then you'll get, regional central banks, you'll get you'll get national central banks adopting certain policy where they can act as a guide in order to work with national financial institutions. I think that that will also have a positive effect, and there'll be an opportunity there where they will be granting, in a way, some encouragement to financial institutions to adopt and greater incentives, to use an economic term, to adopt more climatic risk practices. I'll stop there.
Great points, Vairav. Actually, these are great points because we are living in a moment where many forces are pushing in the same direction. The regulations, also the different policies around financial institutions, and also the push from the farmer side. So this takes me to the other question, and this is a two-side question. What climate risk mean for the financial institutions? That Vairav could tell us about it, but also what it means from the farmer perspective. And then what are the challenges that they are facing in the local level, but also when trying to access to finance. So let's start with Melissa. Melissa, could you tell us a bit about climate risk and what it represents and what it means for at the farmer level, and what challenges they are having when we talk about accessing to finance?
Good morning to everyone. Thank you so much for this opportunity to be able to, share the experience of the of Belize with the Eco-Micro project, and then the actual product, which was the CTARP tool. The program actually, the farmers here in Belize are experiencing, as you indicated, their three main challenges. There's drought, and we're seeing extended periods, and then there's flooding. Again, it's longer time, so we're having more rainfall, and then the risk of fire depending on the region they're in. Just for a bit of background, Belize is located considered in Central America as well as in the Caribbean. So we do have the threats of hurricane in different times, in that particular period of the year. So most from the experience, and as my colleague Lindbergh mentioned, we had 26 loans issued under the pilot. And while the program was also targeting agriculture, fisheries, and livestock in general, most of the loans were livestock, agriculture centered or focused. We didn't see any of the loans in the fisheries sector. So that goes to show that there is a lack of, there's a weakness in information sharing, and there's also a weakness in adaptability, especially for the fisheries sector. So there's some additional work we can do there. But focusing on the agriculture sector and the farmers we engage with, we had agro-processors, we had cacao farmers, we had onion farmers, we had farmers doing goats and sheep, mostly for genetic improvement. And so the challenges that they see on a daily basis is, one, most of these small farmers don't have a farm plan initially. So they're operating on the traditional methods and from using experience, saying, well, the weather is going to be good today, the weather is going to be good tomorrow. So the tool is very essential, and it has helped to create those zones and add those layers of history. What we found was that the financial institution, so when they go for a loan, a farmer without a plan is basically saying, I need, X amount of dollars to invest in my onion field. So we have the problem of the location. They have maybe had, as Lindbergh mentioned, already indebted already because they've had loss over the years. The extended rains and so on affect not only the crop, but the landscape, but also there's increased risk with pests and disease. And so those are some additional challenges that a farmer would not have, picked up or keeping a trend of as well. So the challenges continue in terms of reaching to your institution for financing, and then you're maybe asking for a $5,000 or $10,000 because you just want to replant, and you're not considering the challenges that I will have water issues in the next few months. So that in the use of the tool, the credit unions were able to zero in and make some solid recommendation. It doesn't mean that the farmer takes on the recommendation, because it incurs additional costs for them to be able to make that investment. But at least they're able to sit down and have a conversation and to figure out if they really want to take that risk. It also then allows the credit unions to cover themselves, because insurance, farmers are not inclined in Belize. It's not a common practice to have insurance for their farm or their plots. So this is something that will help to strengthen that request, for the policymakers to be able to make that be a priority going forward, given that we know what are the risks and the challenges that the farmers are facing. Additionally, the other challenge for farmers is the technical support. Extension service is pretty weak in the country. We have a zone of 6 districts in Belize, and limited to 4 to 6 extension officers within each of those districts. So that just gives you a perspective that they will never be able to reach these farmers on a one-on-one. But to be able to have a tool, to be able to look at the landscape in general, and then zero in and say, well, within this particular time and zone, these farmers are planting and these are the challenges. There has to be a network within the institution. So we are championing that effort to be able to have other FIs take on and use the tool or adopt the tool, but also that it be integrated at the extension service level, so that farmers can be provided with better advice in moving forward. I also wanted to mention that the use of technology, we're practicing more open field production. So the introduction of cover structures to be able to have better yields and more resilient crop production. So this tool is also assisting in identifying the technologies. Solar energy was one of those that we saw, the use of water pumps to be able to irrigate their fields. So all of those recommendations and are at your fingertips, no? And with the support of the credit unions to be able to now at least give a hint. The tool gives them a hint. They're just not providing the loans in just because the farmer needs it or wants it, It's also helping them to make more sound decisions.
Great, Melissa. These are great also perspectives from the farmer levels, and then yes, definitely the tool in not only the CTAR, which is the case that we're talking here, but all the technology itself. It's helping, or it brings an opportunity to have access to better and more data. But to access to more data doesn't mean also that this will be quality data, and then this is something that we need to take care of. Lindbergh, from the CUs, the financial institutions, how the climate risk assessment, and you show us in the presentation how they are taking in specifically San Francisco Credit Union. This person, he was explaining how they are using the CTAR. What the climate risk assessment mean for them, for the financial institutions? How they are looking this as an opportunity to do what? Could you tell us about it?
Yes, for sure, Alejandro. I think for credit unions, this is a huge deal. This is credit unions on a whole try to give loans that are secured, loans that are they want to ensure that they can that the member can repay. However, when we look at the agricultural sector, in recent times we have been hit very hard with severe hurricanes. In fact, just I think a year ago, we have been hit with a prolonged flooding, especially in the northern and the western part of the country, where we have seen communities inundated for weeks, and crops being lost by the millions. And then we have seen prolonged droughts just before that weather, and so our farmers have been hit consecutively by varying climatic shocks. And this really put farmers in a huge in a battle for to rebound, and also to gain back balance, and to also seek additional financing. Now for credit unions, without the use of this tool, or without this tool, we had to rely on what the farmer was saying. We had to rely on our best judgment. We had to rely on maybe doing some field visits from time to time. And sometimes with some of these things lacking, we take huge risks. We just lend, and we realize that sometimes the loans were not being used for what they really wanted the investment for. Sometimes we realize that the farmer invested, but guess what? The funding they requested were insufficient or inadequate, and so needed more financing, and they were not in a position to to access more financing. And so what this tool did for credit unions was the fact that it helped to kind of bring risk into more perspective, bring risk into more focus, and kind of have credit union have a more grasp of what the situation is on the ground, linking climate to lending. And I think that's a huge advancement for our credit unions here. So while the tool provided some kind of guidance with respect to risk, it kind of tried to link risk based on your geographic location. It put credit officers at an advantage in the sense of providing guidance to loan recipients or prospective loan recipients. It kind of put credit officers at an advantage with respect to providing maybe better and more sound advice and guidance to farmers with respect to what they should consider investing in, because we realize that over the years we have been continuously lending for agricultural loans, but we have not been lending for green loans and for green investment. And so a lot of farmers are already being over-indebted with loans in the sugarcane industry, in the livestock industry, in the greens industry. And so a little bit more funds being used more smartly will help farmers to bounce back much faster, and will help farmers to repay their loans even in a quicker or even in a more efficient way too. So I think, put that into perspective, I think the tool is putting credit unions at an advantage, and even any financial institution at an advantage with respect to having information that is so needed to make better and more improved decision making. And I think that is what we are benefiting here from Belize, no?
Yeah, thank you, Lindbergh. That's great. And then actually, this reminds me this Miguel Angel art piece, the Adam's creation, where both worlds are touching each other. The climate science and data, and also the finance, which for several years has been very separated or very far away from each other, right? So to talk about more about that, and talking about climate data and how these data and resources are available for the different institutions, Norman, what do you think about this, the use of climate data? What resources we have currently? Could you speak up about the existing technologies and access to data that we have in it, which challenges we face by creating the CTAR?
Yes, thank you, Alejandro, and good morning, everyone. I'm glad to be here. Well, you see, of course, all this event is related to information and technology, and one of the things that our basic technology can do a lot of things right now. I just saw yesterday a talk about artificial intelligence and all these new technologies. But when we try to build the tools, we hit a wall that it's about access to data. Actually, it depends on the country, but since we are talking basically Central America, the Caribbean, that is where we have more experience. We know that there are some data related to risk. That's, I think, is the most important for CTAR risk-related data, but usually it's not in a format that is accessible or is not centralized, or maybe it's regulated. And I want to point out something that Byra mentioned in his talk about how assessing risk with evidence base. And I think climate data and risk data is the most objective evidence base that we can have, because it's not biased to some interest, or it's what it is. And even some people think that climate change is a myth. We remind every season, every year that this is happening, and it's imperative to try to build these databases. So yes, data is important, but accessible, manageable, and to be able to apply. And that's what we have tried to accomplish with CTAR, of course, with what Lindbergh mentioned about what could be the evolution of this kind of systems. It's, again, we get back to data. And so the most important data is long-term data in case of risk, related to risk. So for example, in the case of Belize, that it's what the tool that are currently deployed in Belize, we work with a 25-year return of flooding for Belize. So this is not just amount of rainfall, but excessive rainfall in a 25-period return. This is like a first approach, but of course there is some better ways to generate this data. I think that that's something that, of course, is not CTAR the one that has to build this kind of data sets, but try to advocate in terms of getting this kind of data. The fire and drought, the fire, it's, I think what we talk here, it's really usable in terms that it's prone of the kind of terrain and this, and drought, again, it's based on long time series. So it's long periods, more than 10 years when we have recorded drought. So of course, this data is based on history, and this is important. But again, taking into account climate change, we cannot assume that these 25 periods could not become five-year return periods in the future. So that think it's challenging to even get and prepare more data. So I think that data is important, but in an accessible and manageable way. And also we in CTAR, we try to prepare the data in order to be easy for the officer. I'm glad that what he mentioned in this short video about how they can interpret a map with a scale from 0 to 5 to know that it's a low risk or a high risk. Even, of course, the data didn't came that way, So that's something that is important. And the other thing that I am glad that CTARP has been used to is, as Lindbergh mentioned, he mentioned that it's the first time that a tool that knows where the members are and where their projects are. So these are things that from a geo perspective, we are that in this kind of data, it's like basic, but it seems that there are still some opportunities there to enhance this kind of system, not just to know their name and their references and everything, but location is important, and of course in this kind of tools is important. But data is also an issue, always an issue, Alejandro.
Definitely, data is an issue, and actually this is I think this is an issue that we faced worldwide. In many of the projects that where DI has worked as well, has started with that challenge of accessing to data, which data sets we access, but also what type of quality of the data we get, because we use historical data, which is observational data, and then these data sets are like, let's say, the best quality we can get. But now there are also some climate scenarios that will bring us to 10, 20, 30 years. And then this, as you mentioned, we have these climate scenarios has different models that could take one way or the other. So this is uncertainty. Well, seems like to be a little bit of uncertainty associated with that. So let's talk about the opportunities. We had this experience with CTARP, with the climate TARP, and then what is next? I think Lindbergh mentioned that it will be good to connect the banking platforms and the financial institution platforms with the data that already the CTARP is producing. So how do you envision that, Norman? How do you envision the interoperability of the data using the climate risk and then the existing data that CTARP has?
I think that the first step is already done, and try to construct this tool, a tool that financial institution can manage, and with a certain framework where they can decide which questions and assessments to do based on the sector. The climatic and risk data that, of course, is objective, as I mentioned, objective in terms that is what it is, and it's not something that has the problem still is how to collect it and standardize, but that's something that I guess with some level of work we can accomplish. And maybe the next step is to advocate on these practices for other financial institutions and businesses, maybe through building an API or something that could easily connect systems from one institution to the other. Since we have location, we can have like a objective assessment, because the tool has a subjective assessment that is based on the questions of financial institution, but this objective assessment in terms of climate risk, in terms of vulnerability, in terms of maybe start to build, we have mentioned in the talk with the stakeholders that risk information is important, like the first key decision point, but then short-term forecast, not maybe, when I mean short-term forecast is seasonal forecast for certain crops. So this is something that could be built on a system that then can be used as a service or an API that connects to different sectors. If it's for rice, for example, it's some information. If it's for livestock, it's other kind of information. Also, Met Services have a key role. They collect most of the data, but many times it's not accessible. So this tool can be like a hub of data that can be used for this kind of applications. Also, Melissa mentioned about insurance, and We have worked before in insurance, in parametric insurance projects, and those are based mainly in weather observations, since has to be the decision has to be, again, objective in terms of amount of rain, and for that you have to have access to real-time data, and this is something that, again, is the challenging part in that kind of system. So this can be a starting point to build this platform that could provide this kind of services to different sectors like insurance, like credit unions, or other things. And I have a, well, since you mentioned what could be the future, again, I'm really like music when Lindbergh, to my ears, when Lindbergh mentioned about maybe in the future an app. I think that an app based on this could serve the financial institution for giving the tools to the farmer for a self-assessment. Since this financial institution made their assessment before, they grant the loan, they have to use the app in the future, and they have to make a self-assessment with the same tool that is received by the financial institution. They can send advice through the app for weather information. But again, this is something that it's easy to say it, it's just ideas, but we have to have these connections with other sources like the Met Service, like weather models, like the climate scenario that you mentioned. But this is, I guess, at the start of a platform that could deliver this kind of information. That's, I just want to point out about that.
Totally, Norman. And actually that brings me also to that individual responsible investment based on climate information. So maybe Vaira, just thinking out loud and thinking about the future, how do you envision this type of tools? Usually the access for these credit unions, accessing these tools and these solutions became to be difficult, and also sometimes these are not, you know, at the fingertips for them. And then in this experience we had, we noticed that this was a great opportunity also to create this type of products. How do you envision the model of providing these solutions, getting close to climate information with the risk models in these institutions?
Absolutely. So, you know, you've heard a lot on this panel already, echoed by Melissa, Lindbergh, Norman, this idea that it's really important to overcome these barriers to access such a tool. It needs to be customer-centric in its design. Also, and that would speak to Norman's wish that ultimately in the future, you do the self-assessment, right, by being truly customer-centric. But even before you get to that, there's still a long way to even solve how do you help the staff, the loan officers, for example, the financial institutions, to easily be able to use a tool and not be intimidated by the climatology, the scientific aspects. Like when someone hears climate risk, they think, they panic because they think, oh, okay, I need to know the ins and outs of climatology. I need to know how this heat map works. Or no, actually, it's all about how do you make that accessible such that, you know, most people can use it. And what we were hearing from, you know, the video that Lindbergh showed is that, you know, the credit union managers, loan officers, they're now converted into being able to demonstrate and train others within the credit unions to use this tool. If we take a step back and we look at the market, right, you know, there's lots of different tools out there for different people, depending on what they're wanting to do. So, you know, there might be investment banks that are wanting to put millions of dollars into the next green infrastructural project, in which case they need a climate risk assessment tool that has very different information to help them make that big investment decision of multi-millions of dollars, right? And so they may need to be computing more complex algorithms and so forth. And so all I'm saying is that climate risk assessment needs to be proportionate. That is very different to what Melissa was speaking about of, okay, members or clients of a credit union wanting to now think about $500 to $2,000 of capital investment for a climate cover structure, a structure that protects their crops and allows them to then grow more yields, etc. So, I think it's very important to bear that in mind of really making it accessible. Now, the other feature, and Norman spoke about this, is one thing is you have all the data and you have the information, but to really move the needle, or to use another expression, for the rubber to hit the road, it needs to be interoperable with their core banking system so that they're reading off one system in terms of making their loan decisions or their insurance underwriting decisions. All of that needs to be interoperable. And so that's the other design feature of making it important to do that. So it's not just something that sits outside of their core appraisal. The other thing is, one of the gaps that we were seeing of, I spoke about that figure of only 3% of finance goes towards agribusiness in Africa. Now, another way to move the needle beyond making it accessible to financial institutions is also, now to speak to Melissa's point, how do you actually make it, how do you sell the value proposition of investing in those technologies that help them to be more resilient? So whether we call that climate smart technologies, agricultural approaches, how do you sell it to them? Well, they're not going to do it just for the fact that for altruistic reasons. They're going to do it for one of two reasons, in my opinion. One is that they want to make savings to their business, or to use Melissa's example of the cover structure, a cover structure is brilliant. Not only does it protect them from the impacts of climate change, guess what? It probably, if done well, increases their revenue, right? Because instead of growing 2 crops in a season, maybe they can grow a 3rd or a 4th crop by virtue of being protected, right? So, always looking for what is the business proposition for the customer is really important. That's what will actually move the needle. So I'll stop there.
Yeah, I would like to hear from Melissa, her thoughts, because I'm looking at her face and then she just imagined the future. So Melissa, how do you envision this future on the farmer side, accessing to this better information and then accessing to the specific products or services in the finance sector to improve productivity, or as Byron mentioned, improve efficiency and make savings on his or her business? Can you tell us about it, please?
I guess in gathering data and visiting the farms, it wasn't like, as you said, climate change is not just a buzzword anymore. It is real. And I don't think that a lot of our farmers, or even in general, people in general, take it, we're taking it for granted and thinking that, oh, the weather is bad today, it will get better, that kind of thing. But yes, it's about productivity. We visited some farmers, for example, who lost their entire acre of onion. So their investment, they become, they get frustrated. They may not go back into planting onions again, or they just quit altogether, and then I've seen the limited use, as the example I've given was for cover structure. I've seen limited use of a cover structure. I myself can speak personally because I've gone into the farming thing as well. And for me, it was a no-brainer. I live in an area where there's definitely flooding, and then there's the risk of drought. So why would I want to plant go into the sweet pepper crop? And so I made the investment of a cover structure, and to have 200 plants in a structure that's 20 by 60 feet long, and to be able to have 2 or 3 cycle production, and to see a farmer, doing 2 acres, and the challenges that he's facing with the pests, the management of those different factors. With that structure, we're able to have a water reservoir. In visiting the farms, you see a lot of them don't have water reservoir. While there's access to water, meaning a low-lying area, they might have a pond. How sustainable is that as they're going, over the years? How the water, is it the damage to that water, is it healthy enough? So there are a lot of other factors that the tool is just opening up. It's just starting to open up some of those areas. So on Norman's perspective, I would just like to see other layers added to that, not just the flooding and the drought and so on, but also the actual technologies that would work. So for now, the credit union officers are only able to pinpoint, okay, you're in a particular zone that has these threats, but the actual recommendations, and those can only come from actual a science base and actual practices, and to see what's available in the country. Then when you think of the farmer and their costs, it's always prohibitive because of the investment. So we need the institutions, we need the credit unions to be able to take that risk as well, and to know they have to have some confidence that the technology the farmer will be investing in, will make a difference and will allow them to be able to pay back that loan within reasonable time. So that's from my perspective. I would just like to see more of the technology being included in the recommendations, and to give farmers a more sound, decision as to how, because as you said, it's to make a $10,000 investment in a structure. Initially, they don't see the benefit, but over a period of time, it just makes your life much more easier. And we're doing it the old school way, and so we need to improve and adapting those technologies. So we recognize the threats, we know what the risks are, so we now need to tag the technologies onto that.
Totally. That's a great point, Melissa. And then we need the CUs, the credit unions, to take the risk, supported by good data. And definitely, sorry, I will get with that. We are going to open space for questions from the attendees, and then also if there are questions from the other panelists to panelists, so we can have it too. So I don't know, AJ, if we have some questions, the people here watching this session could just send the questions in the chat to any one of the panelists, and then we can start driving these questions. Okay, we have one first question. How is the program being scaled up? For example, are there other banks in Belize taking the tool and using it, or has the project stopped after the first set of credit unions use it? How is the tool being scaled? This was asked by Hujat Nadaraja. Sorry, I'm Latin and I'm bad on that. But I think this question could be answered by Vira first, and then maybe Lindbergh could also chime in there. Vira, you want to take on this?
Excellent. So to answer this specific question on Belize, the pilot has been 3 credit unions in Belize, but the Belize Credit Union League, represented by Lindbergh, is a massive league insofar as, and Lindbergh will correct me on the data point, but in terms of financial inclusion, not in terms of asset value, but in terms of financial inclusion, it's responsible for between 45 and 50% of the population. And there's many more credit unions beyond the 3 credit unions supported in this pilot. So one aspect of scale would be beyond these 3 credit unions in the pilot that are brave enough to really work hard and adopt something new. By showing proof of concept, they can crowd in the other credit unions within the league. So that's one aspect. What we have found is actually another financial institution in Belize, which is actually the Development Bank of Belize, is interested in using the tool as well, because they see now it's of great value to them in their portfolio, and they would also like to access such a tool. So, you know, scale that's answering your question on scale within Belize. Lindbergh?
Yes, bro. I think you have hit some good points there, Berev. I also think, well, at this point, we are currently in the piloting phase. We are currently nearing we have a few months more to go before the closure of this program. And so the scale up has not begin as yet or commence as yet. But the intent is to indeed see if we could have our other credit unions incorporate such a tool within their operations. The idea is to also see if the existing credit unions can try to use the tool across their loan portfolio, which is another form of scaling too as well, because it is currently being used just for the green financing pilot, currently being used just for these type of green loans. But the idea is to try to use it across their loan portfolio, because there is some level of risk, whether it be environmental, climatic, or other forms of risk. But the idea is to understand the risk or the climatic risk associated with their entire loan portfolio. That will put us in a better position to kind of maybe improve on policy. That will put us in a better position to perhaps maybe offer more training to credit officers. Sorry, that will put us in a better position to perhaps beef up what we currently have, to beef up our modus operandi in strengthening our offerings to our loan recipients or to our members too as well. So I think those are some of the things for scaling. Well, with respect to the commercial banks, I think I think that's a whole different story. They have their own tools there. We don't have a close relationship with knowledge sharing from a commercial bank to a credit union and vice versa. So I think credit unions, not credit unions, commercial bank may need to invest in tools like these. It's open, but the idea for us as credit unions is to champion the use of these type of tools, because it does not just strengthen our position, it provides concrete evidence for more sound decision making. And I think that's the most important. Two, we have been hearing from about the need for data. The trend, when we look at it, was once upon a time was the speed of service, how efficient you are, the need for more attractive services. Today, and in this age that we're in, data becomes the new weapon. Data becomes the new ammunition. Data is now something very valuable, because with data and having different data sets at your fingertips, you will be able to make to kind of innovate. You will be able to bring out innovations, develop new type of products and services that you might that these members might need. And so the idea of just having data at your fingertips is one, but the most important thing of having those data is the analysis of those data. What is that data saying to you and to your FI, so that you can transform that data into a weapon that you can use to even develop greater competitive advantage. Since I'm here, I just want to also add that when we're thinking risk too, one of the good, a very attractive component of this tool is the fact that it assesses the loan recipient knowledge with respect to climate. And I think when the tool map or provide some kind of risk or allocate risk to that particular individual or loan recipient or location, it also takes into account the knowledge of that member too as well. Is the member knowledgeable about climate risk? Is the member knowledgeable about his or about the type of investment he or she will undertake and things like that? And based on the type of answers that you as a credit officer input into that tool will help shape the kind of risk allocated to that individual loan and that individual a member. So over time too, what this tool will allow you to track from an FI standpoint is the knowledge base of your members. Are your members increasing and developing stronger knowledge points or you know, that they can use to even transform their own selves and their livelihoods as well? So I just wanted to add that here because I realized that was missed, but that's a very key component of this tool too as well. And I think it's not just the fact of tracking risk from your geographical location, but also tracking the risk from an individual standpoint, because while you might have all the necessary prerequisites and requirements, you could be a risk to your own self because of not knowing what to do or how to properly do it. And so it kind of tracked that component too as well.
Awesome, that's great. And I just wanted to piggyback on this question is, we have received some other requests from other countries as well. And then that as part of the plan out, you know, bringing in scaling CTAR, we are working also in a better conceptualization of the financial risk modules. So the climate will be translated into a better and more comprehensive data and information for the financial sector. So that will be also one key point there. We have another question from the public. Does this help investors with assessing the environment in ESG factors? Do you want to take on this, Vairav, or anyone on the of the panels, or you, Linda? You want to take it?
Can you repeat it? Just I missed it.
Yeah, if the tool help investors with assessing the in the ESG frame, with assessing the E of the ESG.
Yeah, so the use case for the tool was built around the more micro level angle, meaning at the level of financial institutions granting financial products or green financial products for businesses primarily. Having said that, there's multiple use cases for the tool. There could be use cases for a let's take a multinational corporation looking at its portfolio and its exposure to climatic risk. So if you're a commodity-based corporation, you know, a fast mover consumer goods company, you know, publicly listed, you know, you could be using such a tool rolled out in the various jurisdictions, markets in which you operate to check some aspect of the E. So it wouldn't answer all aspects of the E, but it would answer at least some aspects to climatic exposure, right? So yes, you could use it for that, and there's many other use cases. You know, Alejandro, I mean, you know, you could speak to many more use cases, but yeah, I would say in principle, yes, but its original design was not around ESG screening, but it's an interesting question because I think it could be adapted for that use case.
Totally, that's correct. And then we are running out of time. So right now I'm going to make a brief summary of this session, which was, you know, time flies. And then actually I thought that 90 minutes was a lot, but I think we can still hear and then talk for hours about this topic. So we started this conversation talking about the experience of the CUs. Lindbergh bring us some all the experience around the use of this climate TARP and this the approach with the credit unions. Bringing some interesting perspectives on how they are using it and how this tool was incorporated, and also talking about the futuristic products that this tool could offer. Bhairav also mentioned that this, well, we need to see the overall picture where, for example, 70% of the Africans employed from the in the agriculture sector, only 3% of them have access to financial services. So this has to be changed, and this with information and with the correct information, we cannot build a boundary or build a wall to the access to finance, and build it. The tool will help us on building alternatives to lend and then have access to finance. Also, it was mentioned that the opportunity is to make businesses producing all the products that we consume, actually. So we need to ensure that the finance is flowing correctly and in a safe way. The financial institutions need better access to data and information to make better decisions, and that was also something that Bhairav mentioned. They need to drive climate risk as part of their processes. And also, finally, Bhairav in his intervention mentioned that globally regulations are changing, and they are pushing financial institutions to include financial risks as part of their assessments. Also, Melissa speaks some about the most farmers don't have a farm plan to operate in. They are operating traditional methods. So whether it's they just going out, hey, whether it's will be okay or will be bad, they are not like, you know, incorporating more science into this layer. And so the climate data and information will be key for them also to make better decisions. So also Melissa mentioned that there's solid recommendations with additional costs, but they are able to sit down and have a conversation on how to address the risk, and that's good. Also, and this was brought by Lindbergh. This is helping to shape the requests that this credit unions are getting, and then also for loans and for the insurance sector. Also, it was mentioned that there's a need to Melissa mentioned that it's key also to provide technical support. There's a lack of coverage of the technical support. So in the future, maybe the tool could be used also as a client-facing or extensional services, which by connect this with other topic that was brought, that where the individuals should be also responsible in terms of climate, using the data to have take responsible decisions around their farm. Lindbergh has mentioned also that this tool is huge. It's a huge opportunity for the credit unions, and putting because right now the farmers are in a battle of the use of this tool will relay on what the farmers are trying to say, and then the farmers will get better assessment, more shape to the location that where they are. The farmers, let me see. Sorry, I was taking the whole notes. Also, one important thing was that mentioned here was there's a need to bring risk into more perspective and focus linking to climate and to lending. So this is what the tool does, and then actually there's a good space on innovation around climate risk assessment using the existing data, but having more friendly methods and tools, platforms for credit unions. So that's an advantage for the credit unions. Norman talked about some of the technology. He mentioned the challenges that we faced on accessing to data, and that's a challenge that we have worldwide. We use the information from a long time series of data, about 30 years. So these climatologies are built on top of that. And then this tool was based on the historical data. The geolocation data is also key, a core feature in this tool, because allows the project or the specific loan requests to be geolocated and know more about the areas that this project will be implemented. The next step Norman was also mentioned is to work in the advocate of these practices, and also building an API or a connection with the interfacing the data with the core banking systems. And that will be also the future and part of the how these type of technologies will work in the future. Norman mentioned as well that the Met services have a key role on connecting data. In the future will be also connecting what Melissa was saying, bringing the climate data for individual responsible investments. This tool mentioned also by Raf about the customer-centric, allowing financial institutions to use this tool and not being intimidated by the climate risk or climate or how climatology works. Finally, the other features that let me see. Oh, we spoke finally the gaps that we are seeing in this experience, and then how to sell the value proposition. You know what this tool is bringing to the financial institutions, and then on the climate smart tech provision, and also fundamenting this the use of the tool on the increasing productivity or making the process more efficiency for farmers. Farmers usually get frustrated when they try to quit. For example, Melissa brought the example that she invested in the cover structure to have a better access to water reserve, and then making more sustainable her business. And then this crossed by a good use of data and information. All right, I will finally close with with this phrase, which I really like. Well, two actually. One is allow the CUs, allow the financial institutions to innovate and providing new and better services. The use of climate data for risk assessment basically provides a wider spectrum of services and products for the farmers and for the agriculture. Sorry, somebody unmute me. So I just wanted to share a big thank to all my colleagues in the panel. Thank you, Lindbergh, Melissa, Norman, and Byra. This was a great panel, and thank you so much for being here today. And thank you everyone for joining the session, and we invite you to continue connected with the ICTforAg 2022.
Thank you all so much. Have a good day, everyone.
Thank you.
Bye.
Bye-bye.
Take care. Bye-bye.